Hey guys, this is Zeno here. This is my first ever YouTube video. I just wanted to give you guys a brief overview of the difference between technical and fundamental analysis when you're looking at stocks or other investments. I hope you find this video useful and you guys get something out of it. If you do, please hit the like and subscribe button below. Thank you.
Alrighty, hello everybody and welcome to Technical versus Fundamental Analysis brought to you by Zeno. In today's video we're going to be going over the differences between technical versus fundamental. Now, what's the difference you ask? There's a lot. Both are very distinct ways of looking at stocks and or any sort of investment, and we're going to be going over those now. They are vastly different, but that does not mean that one is greater than the other. Both are equally important to one another, and if actually used together, can increase your chances of becoming a profitable trader and or investor. Now, we're going to start off with fundamental analysis first. This is a macroeconomic overview, which is just a fancy word for saying we're going to start from top and go to the bottom. Now, essentially, when you're looking at fundamental analysis, you're going to start by picking an economy. So, what country are you looking to invest? Is it the U.S.? Is it China? Is it Europe? Once you've decided that, then there's 11 sectors, and which one do you want to look at? Do you want to look at real estate, healthcare, industrials, energy, technology? Once you're picked a sector, then you pick an industry within the sector. Which one looks good to you? You want to pick technology sector, then do you want to go for phones? Do you want to go for TVs? Do you want to go for cutting edge technology, computers, AI? And then finally, once you get to the bottom, out of all the companies in that industry, which one catches your investment eye? So to keep going along with the technology example, let's say you pick the technology sector, you picked phones as an industry, and then you're looking at Apple. That would be a quick example of that. But the most important part of fundamental analysis is, ladies and gentlemen, I can't stress this enough, is to smash these two buttons for massive gain.
Bop, boom, pow.
Just kidding, guys. But I really would appreciate it if you would. Anyway, moving on. Fundamental analysis. There's two distinctive pathways of looking at fundamentals. When you're looking at a company, how we worked our way down from economy to industry to sector to company. Now, once you get a company, for instance, now there's two different ways of looking at it. There's quantitative analysis and there's qualitative analysis. Now, these are just fancy ways of just basically breaking down fundamental analysis. Let's start with qualitative. This is essentially the how can I say, the newsreel or the glamour shot or the picturesque company. Qualitative analysis is things that you cannot put into numbers, such as having a CEO like Elon Musk or having amazing branding like Nike and Apple. I mean, you see these symbols, you already know what it is and what they do, and you probably have some items of that sort. Another great qualitative attribute that some companies have is an economic moat, which is just a fancy way of saying they have some sort of a unique product or service that protects their profits as a company and keeps them very successful. Now, on the more boring side, some people might say, but this is actually my favorite. It's quantitative analysis. This is where you look at the numbers, essentially. That's why I'm illustrating it with this picture. You look at their balance sheet, you look at the assets, you look at liabilities, you look at all the numbers, you look at revenue, earnings, cash flow, then you do some math, ratios, price to earning, price to cash flow, data. That's the backbone of this entire part of analysis. This can kind of paint you a better picture in a number sense to kind of give you more of a confidence in going forward. So qualitative is something you can't put into numbers, and quantitative is something that is just strictly numbers. Now let's move on. That was a brief overview, so let's move on to technical analysis. Let's see what the difference is. So technical analysis, you'll see a technical trader essentially, if you look at the back of their heads, this is what it's going to look like most of the time. Going to be looking at a bunch of screens, and there's going to be a bunch of price action charts. We're going to go into that. And they're basically just looking at how the numbers develop over time, and they make investments off that. Like, they're not looking, when they trade Tesla, for instance, they're not looking, at what Elon Musk, the CEO, is tweeting or what. They're just looking at whether the stock is going up or if it's going down, and whether or not they want to hop in that boat. So I'm just going to give you a couple quick examples. This is what you would call a price action chart. So this is Apple. You could tell up here. And by the way, guys, feel free to pause this video at any time if I'm moving a bit too fast, or if you just want to take an extra look at any of these slides. I cannot stress enough that taking your time with this is going to be crucial. Apple, here's a quick example of this. Here's a quick example of Amazon and how it did. As you could tell, these are very positive charts. These are what you call gains, essentially. If you want to read this chart, if you look at these numbers to the right, you'll see the price points. So like right over here, you see Amazon's trading around $3,279 per share. And you can see how that price point struggles to get to where it's at. And then here's a third company. I put two very successful ones, so I want to put one that's not doing so hot right now. This is Aurora Cannabis. So it had really nice highs, and now it's kind of been in a slump, and now it's trading around $8.42. So there's three types of price action charts. There's a line chart, a bar chart, and what you would call a Japanese candle chart. Now this is the one you want to use, excuse my grammar. Um, Line and bar charts aren't really utilized. Some people do utilize them, but the candle is what's going to give you the best illustration of what's going on in a price action sense. To explain what a Japanese candle is, this will be a bullish candle. Green is good. Green is money. Red is bad. Um, when you look at a Japanese candle, this body is essentially how you could read four different price points in one illustration. So open means where did the price start? Close is where did the price end? So let's say this is $10 and it shot up to $11. High means how high did it get within that time frame. So let's say this was 12, maybe it moved up to 12, but it came back down to 11. And low is how low it ever went in that time frame. So this could be $9 or $8 in this theory. Decreasing is just the inverse of that. So candlesticks can be displayed in either minutes, hours, days, weeks, or months. So one of these candlesticks could either represent 1 minute, 2 minute, 3 minute, 4 minute, 5, 15 minute, 30 minute, etc. Could describe 1 hour, 2 hour, 3 hour, 4, 8, or it could display a day or weeks or months. And I put a little example here to the bottom right, just to kind of show the strength of a candle. At best, this is what it looks like. Second best, you see there's some struggles. That's what you call the tails. Here in the middle, you could start to see it kind of reverse. It's what you call a spinning top almost. And in here you see it failed to go up, and it's a small gain, and now finally the trend reversal, which means it's going back down. Here's some patterns, some technical patterns. So you'll find these as stock trades. Some of these patterns naturally develop. So these are bullish patterns, which means they think the stock price is going to go up. As you can see, like it's going up. It has a little bit of a pattern forming here, which indicates that it's going to keep going up. And now there's about 8 examples here showing strong bullish patterns, which basically means the stock is going to continue to rise and there's profit to capture. Now bearish patterns going down, unless you're a short seller, these are signs typically to tell you to exit your trade and take the profit and run with it. So as you can tell, it's coming down. There's a pattern and it tells you to sell because it's going to keep going down. There's names here, so feel free to pause this video and take some notes. These do have some back testing capability. These probably have certain probabilities of success, or else they wouldn't be functionally utilized patterns in everyday trading. A lot of retail traders like to use this. Most professionals, they do more advanced trading. As you can tell, this is a price action chart. Now, I'm going to show you guys how to read this. Let's take a simple company called Apple. All right, so this is the Apple chart. This is a 5-minute chart. There's a lot going on here, obviously, so we're just going to try and keep it simple. Up here, if you click in, you could notice that the 5 minutes is highlighted, which means each one of these candlesticks, and we went over that before, represents 5 minutes of time. So essentially, if I were to zoom in here, let's just expand this a little bit. So this is Japanese candlesticks in real-time action right here. So anytime you see a red candle, it means the price is going down. Every time you see a green candle, the price is going up. And guys, this is what candles are. As you notice, some of these, sorry for the ad, some of these candles have a little tails on them. Essentially, we were going over this before. This is how low they could go and how high they could go. So we're just gonna go back to the 1-day candle display. Now this looks a little wonky. Let's fix it here. Alrighty. So now each one of these candles represents a day. So it's going to be a bit more of a comprehensive look of how the stock performed. This is Apple, by the way. So let's go back to March, for instance, in 2020 when the beautiful lockdown happened. This is another great function about TradingView. You could go back and you could cut essentially part of the price action chart off, and you could play a little game with yourself. See what you would have guessed. Now let's see how this chart plays out when we click play. Now this is going to just go forward. It's of course faster pace. It's not going to take us a whole day to look at this, but once I click play, you'll see how the price action gets delivered on the chart. So you see it moving. So that is every day in the past year, essentially, of what Apple has done in the markets. And as you can tell, it's an incredible stock. It has a lot of strength. It already almost doubled. I mean, just look at it go to the moon, as they say. But this is a really cool functional aspect of TradingView. This little replay feature up here. It's called a bar replay. Now, on the free version, they only allow you to do it on the 1-day candle. That's why I'm doing it with the 1-day. With their paid version, you could use it underneath a day time frame. You could use it with hours or minutes. You could do a lot of back testing this way. But with this video, I really wanted to just capture price action and how it moves, essentially. So I hope this gave you a better look into finally, but not least, fundamentals tell you what to buy, while technicals tell you when to buy.
Hey guys, I hope you found that video useful. I just want to wrap things up here. If you guys got any recommendations, any other videos you want me to do, please comment below. If you did like the video, please like and subscribe and share the knowledge. Knowledge is wealth. Peace and love, everyone. Till next time.